Hey guys, my name is Thomas. Welcome back to the channel. In today's video, I'm going to be talking about IQSTEL Incorporated, ticker symbol IQST. There is huge opportunity to invest in this company. I think it has the potential to 5 to 10x within the next couple of years. The company has been growing super fast recently, and they actually just became debt-free as well, and their revenues have just been growing at an insane rate. They've had some extreme year-over-year growth, producing $13 million in 2018, and then upping it to $18 million in 2019. And then for 2020, they were able to more than double that to $44 million in revenues. And they're actually forecasted to produce $60.5 million in 2021. This company provides services to the telecom, EV, liquid fuel distribution, chemical, and financial services industries. Now, they actually have 4 different business divisions. They're telecom, technology, fintech, and blockchain. Now, they do actually have both B2B and B2C models, which is really good, as it really gives them a diverse range for their revenues, both selling to businesses and selling direct to consumers. Now, their goals for the future are actually to provide better telecom services, solutions, and applications by creating new tech solutions to meet the specific needs of their worldwide customers. Now, just by looking through their subsidiaries, I believe that this is a merger and acquisition or holding company, as it seems they normally have a majority stakehold in most of the companies that are listed right here. One thing I really like about this company is that they're involved in so many different sectors that even if one fails, they still have the other companies that will still be able to produce revenues for them. Also, they will pretty much always be having revenues from the B2B aspect of their business, so that's definitely a good sign for this company. Now, there's a lot of companies involved here, and I really like how they gave us a really simple breakdown of each single one here. I'm not going to go over every single company just to keep this video as short as I can, but I did want to point out the ones that have great revenues and the ones that have great future potential revenues. Q Global SMS provides high-quality SMS services and competitive prices for wholesale markets, governments, corporations, and small and medium enterprises. Essentially a business-to-business SMS service. I do want to point out that IQST owns 51% of this company, not 100%, but what makes me really excited about this company is their revenues. They actually bring in about $30 million in revenues per year, with 95% of it being prepaid, which is just insane. This essentially allows them to have a huge cash flow right off the bat to use for other projects. The next company is Edelics, and they actually offer a suite of tech solutions for wholesale carriers, corporations, and small and medium enterprises in the telecom space. Again, I'm talking about this due to their revenues. They have over 200 customers right now with a $14 million revenue forecast for 2021, and they've actually been in operation for over 13 years, which means they have a ton of experience in this space. So we can definitely see this as being a stable revenue source for IQST. The revenue numbers for the other companies weren't listed on their websites, so I'm not going to be talking about the revenues from those. However, a few of them are actually new projects that the company is looking to finish and create revenues from, which is what this PR is talking about. So in 2020, the 3 new subsidiaries that they incorporated were the acquisitions of Q Global SMS, which I just talked about, IoT Labs, and then they also created a new company named Global Money One LLC. Their existing subsidiaries were Edelics, Swisslink, and its B-Chain. Now, we do know that Edelics and Q Global SMS are producing around $44 million in revenues for 2021, or about $29 million for IQST if we're only taking half the revenues, since they only own 51% of that company. So with the rest of these businesses, I think it'll be relatively easy to actually make their forecasted $60.5 million revenues for 21. I think this is already an industry leader in the SMS and VoIP industries, and their expansion to the fintech arena and IoT sectors is really going to be bringing them more success and revenues in the future. The next PR is talking about their other subsidiary, Global Money One, and they just announced their new Visa debit card service, and that's actually scheduled to launch by June 2021. The debit card is expected to generate estimated revenues over 5 years of $45 million to $128 million, with an approximate profit margin of 30 to 40%. Now, IQST owns 75% of the company, where PayVMS, who is the one that is building the service, owns 25%. So it's definitely in the best interest of both of the companies that this company does really well. In my opinion, I'm trying to look at this stock without accounting for revenues from this company, since it's not a surefire thing whether it will be successful or not. If it is, great, we bring in more revenues, but if not, then at least I know that I'm not disappointed. I've mentioned a couple times now that they're forecasting $60.5 million for their revenues for 2021, and this PR is talking about how they're confirming that forecast. Now, one thing I like is that they point out that it does not include any contribution from potential acquisitions, and they could actually exceed the current forecast if their merger and acquisition campaign goes well. They also recently eliminated all debt and have a growing cash reserve anticipated to exceed $2 million by the end of Q1 2021. Again, that $60.5 million number is not including potential acquisitions, and management actually says they anticipate that this potential could increase for the 2021 revenue forecast by the end of Q2. So they're really making quick moves and trying to make deals and acquire other companies as fast as they can and really try to up their revenues, which is a really good sign for this company. Now, real quickly, I did want to go over their financials from 2018 up till 2020 just to show you guys their numbers. Now, in 2018, we see they had about $2.3 million in assets, about $3.9 million in liabilities, had a revenue of about $13.7 million, and had profits of $1.1 million. Now, they were actually operating at a net loss of $2 million, which is not a good sign, but I'll go ahead and talk about 2019 financials. So in 2019, they had actually doubled their assets to $5.6 million, but they also significantly raised their liabilities to $11.1 million. They did, however, up their revenues by about $4.2 million compared to 2018, bringing in $18 million in revenues. But again, they upped their net loss up to $5.4 million, which was even greater than 2018. We actually don't have the annual report for 2020 yet, so these are for the months of January until September 30, 2020. They were able to more than double their revenues for the same period in 2019, bringing in $29.4 million in revenues, and they were actually able to lower their net loss to $3.5 million as well, which is really good. Now, going back to the revenue forecast for 2021, we know that they eliminated all debt, which is incredible. Those liabilities are gone now. They're actually starting to have some free cash reserves and are looking to exceed $2 million in those cash reserves by the end of Q1 2021. Now, read this very last sentence that I have highlighted for you guys. With a solid and improving balance sheet, growing revenues, and improving margins, management remains confident in its previously announced NASDAQ uplisting objective. This company is super ambitious and is planning to uplist to NASDAQ, which is huge and great news. I definitely think it'll be able to actually do this within the next year, and they're absolutely set up for success. Overall, I really like how this company is being super innovative, and they're just absolutely looking to crush it in the telecom, tech, fintech, and blockchain spaces. They definitely have proven that they're able to create revenues, and now with them eliminating their debts, hopefully they'll be able to generate really good profits this year too. Their recent acquisition for the Visa debit card has a very good margin, in my opinion, about 30 to 40%. But again, I'm not really banking on that having an effect on the stock, just so that I'm not disappointed in case things don't pan out. I really think that this stock is a one-of-a-kind OTC stock. Never have I seen a stock with such huge revenues priced so low before. They have a market cap of only $120 million right now, and just using a super conservative PE ratio of 10 and using their financials from 2020, they should be around a $440 million market cap with their $44 million in revenues for 2020. Now, using their forecasted 2021 revenues of $60.5 million, they should have a market cap of around $605 million. Now, that's just using a very conservative PE ratio of 10. I think has the potential to have around a 1 to 2 billion market cap, which would mean an 8 to 16x from its current price. I'm super excited for this company, and I personally think it's a really good long hold. In my opinion, this is literally a NASDAQ stock trading on the OTC markets, which is really rare. And yes, they do have goals to actually uplist in the future, and I think this company will just continue growing and just crushing it in all the fields they're involved in. Anyways guys, that's gonna be it for today's video. If you liked it, make sure to like the video and hit that subscribe button. I'll catch you guys in the next one. Peace out.